Which is the next stock which could 10x your money like Tesla? Well, in this video, you guys are gonna find out. I'm Ben and welcome to Motivation to Invest. I'm gonna do a deep dive analysis of a fintech stock called Affirm. Now, this stock recently IPO'd in January 2021. So I'm going to dive into the price action for this company, the business model, the founder who is also part of the PayPal mafia, and then my final valuation and buy point for this stock. So this is going to be a really special video, guys. If you haven't joined the investing family yet, feel free by hitting that subscribe button, turning that notification bell on. And with that being said, let's dive in. Hopping right in here to the share price. As I mentioned, company IPO'd in January 2021. The stock actually had a lot of exuberance behind it. It shot up by around 50% and then actually declined also by around 60% with the whole tech stock correction and the rotation out of tech stocks. What does Affirm actually do? What's this company's business model and what makes it so special? Well, this company is involved in what's called the buy now, pay later space. So if you go onto many websites and you're purchasing especially a high ticket item, you'll often see a little button and it says you can buy now and pay later. So you can pay in installments for a product. Now, Affirm has a variety of major partnerships with big companies such as Walmart.com, Peloton, Adidas, Expedia, and many, many more. But something really special has happened with this stock recently. So hopping back into the share price, we can see the stock was trading around $65 per share. And then boom, there was a major pop up 42%. So major pop in the share price, literally within one day. So what caused that major pop and why is Affirm stock up massive? Well, that would be caused by the elephant in the room, which is Amazon. So Affirm shares saw nearly 47% after Amazon partnership that lets consumers buy expensive things in installments. So the partnership will allow customers to break up purchases of $50 or more into smaller installments. And we know, of course, Amazon is the leader in e-commerce. It's $1 trillion company. I believe over 50% of the US population are now Amazon Prime members. So this is a major, major partnership for Affirm. Good news for you guys, regular viewers, and especially members in our VIP group, is I did cover this stock previously on the channel. So if we go back here 8 months ago, best IPO stock to buy, next square, I called it Affirm IPO. So I did cover this company at the IPO, and I've recently been valuing the company. And yeah, since then, the stock's actually risen massively. But what do I really like about this company? Apart from the business model, apart from the partnerships, I really like the founder. So the founder is Max Levchin. So he's part of what's called the PayPal mafia. And the PayPal mafia is a group of technology people, and they've basically changed the world as we know it. Almost all the major technological companies you see today, these billion-dollar companies, most of them were founded by members of the PayPal mafia, which were the original PayPal founders. So if we dive into this image here, we can see we've got Peter Thiel here, who is a co-founder of Palantir. We've got all the founders of YouTube, which of course is owned by Google now. We've got Elon Musk, obviously founder of Tesla, SpaceX. We've got one of the founders of Square here. We've got one of the founders of Yelp and many, many more. And of course, we have Max Levchin, who used to work on a product called Slide, but his heart wasn't really in that product, and he was more interested in the fintech arena. So my personal investing philosophy, after reading over 600 books on investing and studying the greatest hedge funds of all time, is to invest with great founders, those with skin in the game and a large portion of their net worth, especially in the stock. Now, does this company fit that requirement? Well, if we hop in right here, we can see Max Levchin has 6.36% ownership of Affirm. So he does have skin in the game. His net worth is at risk, and he's only paying himself $10,000 per year. So he's paying himself a very low salary. He owns 6.36% of the company. This guy's heart and soul is in the company, similar to Elon Musk was with Tesla. Any recent buys and sells? Well, not recently. That March 2021, there was a big sell, a couple of big sells around $80, $90 per share. So perhaps you could think the stock could be overvalued at those levels. However, there was a big buy at $49 per share and more big buys at $49 per share. So that just gives you an indication of share prices where major institutional whales are actually buying this stock at. And the major shareholders in this company, the company's backed by some fantastic companies. You've got Bailey Gifford down here, one of the original Tesla investors. They invest in disruptive innovation, very similar to ARK Invest. If anything, I would say these guys are much more established than ARK Invest. They've been going a lot longer, and they've actually been doing some fantastic investments over time. You've got Koshler Ventures. This has got a great founder, one of the leading venture capital firms. And you've also got Shopify, which is an interesting investment here. Shopify owns 7.66% of Affirm. So to me, that's a real deep embedded strategic partnership, which is great news for Affirm. Okay, Ben, so what about those juicy financials? Do they stack up for Affirm, or is the stock overvalued? Okay, hopping in right here to the financials for this company. The company is burning a lot of cash at the moment. So they're burning around $300 million every single year at the moment. The company is forecasted to have its margins improve slightly over time. Their revenues also forecasted to increase to $1.1 billion by 2022. Sales growth over the past period has been 66%, but yeah, the company's still burning cash. Looking backwards, the valuation's quite high with a price of sales of 48. So you're paying 48 times the company's sales looking backwards. But what about looking forwards? Because that's where the future is, and that's where our investing is going. Well, for that, guys, I've got my deep dive valuation model right here. So I've plugged in all the numbers. This original valuation model, the template, was created by a professor of finance at New York University. I've adapted it to make it more user-friendly and actually added some new features onto it. I've filled in all the details, 65% growth rate, 50% for the next 2 to 5 years. I've been sort of moderately conservative with the company. The margins is the real issue, so it needs to grow its margins. I predicted the company can grow its margins in the next 5 years to 23%, which is the average for a software company. This is sort of fintech, but it sort of works as a software also. I've carried across the company's losses of $500 million. So what's my valuation for this company? Well, hopping into the valuation, I get a fair value of $68 per share, so close to $70 per share for this stock. Now, if we hop in right here, this is where the stock was trading for a long period of time. So from probably April 2021, so plenty of opportunity to get in there, to now, to just literally just before this big pop, the stock was trading, I would say, close to its fair value, which does make sense because the stock was sort of steady, hovering at that average level. So to me, that's the fair value for the stock. Now, the stock has a big pop right now, 40-50%. Does that mean that the stock is now worth more? Could we increase this growth rate? Let's say I've put it at 50%. Could we increase that to 55%? And if we do that, the stock actually looks fairly valued right now. So there's not a massive amount in it. This company still does have a lot to live up to. But yeah, it does have a lot of growth potential ahead, a lot of great partnerships in the pipeline. However, there is one major risk I do need to point out with this company, and one thing which can hold a lot of people, especially myself, from investing a lot into this company. And that is the technology just seems so common now, and it's really like a commodity. Let me show you exactly what I mean. So there are many players in this space. So let me just give you a few of the names here. We've got Apple, who've launched Apple Pay Later. This was launched in July 2021. We've got Klarna, which is more of a UK company. They also have Buy Now, Pay Later. PayPal's launched Buy Now, Pay Later. Revolut is developing Buy Now, Pay Later. So many companies are developing this Buy Now, Pay Later service. So to me, that's a major issue with Affirm. Now, Affirm does have these deep embedded partnerships, and there's still a massive market ahead to get more market share. But because there's so many players in the space, that's one thing that really, it's just a little niggle in the back of my mind, a little red flag with regards to the technology. I feel Max Levchin, he's such a smart guy. He should maybe focus on other products also in order to diversify the product range of this company. But he seems to know what he's doing, of course, technological mastermind. So perhaps this company does have a technological edge, maybe to work at scale. That's why they've partnered with Amazon. And maybe they'll leave more of the smaller businesses to companies like Klarna or maybe even PayPal. So we'll see what happens with this company. I'd love to hear your thoughts, guys. So please do comment below. If you did find value in this video, big thumbs up always helps out tremendously with the channel. If you haven't joined the investing family yet, you know what to do. Hit that subscribe button. It's completely for free, guys, and turn that notification bell on. And if you do want access to exactly which stocks I'm buying and selling in real time, such as stocks like Affirm before they pop off, then be sure to check out our VIP membership group. There you can access exactly which stocks I'm buying, selling. You also get to join a thriving community of investors, of like-minded investors, share your thoughts, ask questions to me, and much, much more. Of course, my entire portfolio in there, but that's not all. If you click that first link below, you'll be able to join our Ultimate Investing Strategy course, which is basically the same price as the VIP membership group, but it's through my own website, so I can actually charge a lot less and give you guys a lot more value. So that is a real great opportunity for you guys. Memberships will be closing within the next 48 hours. I will leave a discount code down there for $10 for you guys if you do want to sign up and check this out. Fantastic opportunity right now if you do want to step up your investing game and actually learn fundamental investing and be around these like-minded investors. With that being said, thank you guys so much for watching. I hope you all have an incredible day, and I'll see you in my next video. Invest safe.